Hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikidin. I'm a professional trader and a programmer as well. If you guys are new, what I'm doing here, I'm looking at some good opportunities that may happen next days. Sometimes they are very right and they are playing extremely well. Sometimes they are very wrong. I'm not always right. I'm not a forecaster. I'm not a prophet. I cannot see the future. I only play the probabilities. Okay, and if you guys are following me for a while, I want to say thank you for your support, thank you for your thumbs ups. Continue that work, share this video on social media, tell people about me, about my channel, about my website www.pssoftware.true, and let our community grow. You will inspire me for the further work. Okay, let us start then. The first thing I am to do, I am to analyze my high time frames. If you guys don't know, my analysis consists of two parts. First I analyze the high time frame, and then I analyze my trading time frame. On my high time frame, I am to identify what price is doing now and to predict what price is most likely to do next. And on my trading time frames, I am to decide how can I get involved and to execute the trade. So the whole process is called IPDE: identify, predict, decide, execute. Let us start. Let us first identify what the price is doing on our high time frame, and I want you to pay attention to this movement to the downside, to this correction to the upside, and to this movement to the downside as well. So this lightning structure, this zigzagging movement, is called a downtrend. The definition of a downtrend is a series of lower lows followed by lower highs, and it is inversed for an uptrend. This definition was given by Dow Jones. You know about that guy. I hope you know about him. And the theory of Dow Jones says that there are trends in the market and they are tendencies and they are most likely to continue. And there are large trends, medium trends, and small trends, and so on and so forth. You can find lots of his postulates of Dow Jones theory on the web if you are interested. Okay, so let's use this old definition of a trend that was true in the early 1900 year, 1900, in the early years of the 20th century, and it is still those postulates are still valid today in the 21st century. So 100 years it is working, and 100 years trading are extracting profits using those postulates from Dow Jones theory. Okay, let's go next. If the trend is a tendency to move to the downside and if it will most likely to continue, then it is obvious that we are looking for some bearish opportunities. And I want you to pay attention to this level. This level is called a support resistance level, or a pivot level, or turning point level, or a structure level. You can call it whatever. Those levels are the places where price changed its direction. Only at those levels, a price doesn't change the direction if you don't have a pivot. The definition of a pivot is that the price has changed its direction. And as you can see on the market, if you look at on the chart very closely, there are only two states of price movements. It either moves in one direction without stop, or it switches its direction on the into the opposite. So it either continues the movement, or it switches that movement into the opposite. So sometimes the opposite movement is very big, so it is called that we had some major resistance support level or pivot level. Sometimes the opposite direction is not big, so we just have small pullback or something like that. Well, it doesn't matter. On your chart, I have marked the major level. You can see the price bounced off that level you can see it bounced off that level previously 1-2 times. It also bounced off that level, acting as support level, resistance level. Let's go a bit to the history to see how this level worked. It also acted as support, acted as support, acted as it acted as resistance, acted as resistance, acted as resistance. And I'm sure if we go to the history, back into history, it acted as resistance, we'll find more evidence. 2008, so it was acting 8 years ago, it was acting 10 years ago, you see, 2006, 2005, 11 years ago, and this level acted as resistance 12 years ago. It was acting as resistance and support always. So every time price comes back to this level, we see some kind of reaction. Sometimes it is a very large bounces, sometimes it is small pullbacks, but it doesn't matter. Usually we have some reaction. Okay, so let's go on our trading time frame. So sorry, identification part says that we have a downtrend, and the prediction part says that the downtrend will most likely to continue, and we came to that support level that should now turn into a resistance. Broken support turns into a resistance. Let's switch to 4 hour. So we are to go to the downside, and let me zoom it in so you can see what I'm looking at. I want you to pay attention to this twisted top. This spikes to the upside is called the twisted top. 1, 2, 3, 4, 5, and this movement to the downside. Let me analyze that movement. We had a retracement. We had a retest to the upside, and then we have had a break to the downside as well. So this movement is called a 2618 setup. What is a 2618? 2 stays for double top or double bottom, and 618 stays for the entry. I will explain you first the double top and double bottom rules. Okay, what the double bottom is, you first need to have some movement to the upside, and then you need to have a retracement. If you have a retracement to the downside, then you have the first top, and the second top appears if you are having a retest of the first top. And the spike of that retest, the spike of that second movement, should at least touch the lowest close. You see that space between the lowest close and the high should at least touch that lowest close. It can pierce that high to the upside, but the candle close should never close above that previous high. So the spike of this candle should go into this area, and the candle close should never close above that area, but the candle wick can go to whatever level. After that, you are looking for some breaking of that neckline. This is called neckline, V letter neckline. Okay, if this criteria is met, you stretch the fibs to measure your last leg, yes, and you are looking to a 618 retracement to get involved. You just place a limit order here. Your targets will be there to retest the low, and the secondary target would be an extension of 127. And your stop loss should go above that double top. It will tell you that you were wrong and the setup didn't work. Okay, but I'm not trading those 2618 trades, but I know people who are trading them. So just explained you the rules for the 2618. Okay, let's go to 1 hour time frame, and let's look what happens here. Here is the box I'm looking, not that box, sorry. We should stretch the fibs from the swing high to the swing low and look at the 618 retracement, and the price should go to that 618, and it should never break above the highs. So the box I'm looking at looks this way. If price enters this area, I will be looking for some reasons for entry. What are my reasons for entry? I'm trading advanced pattern formations. They are birds, cutlets, butterflies, and ciphers. They are swing trading strategies, and the swings should be related to one each other with those Fibonacci ratios. Without those ratios, these setups are not valid. If there are specific ratios, historically proven testing shows that there is an edge. If you trade those patterns, you will inevitably generate money because of those probability. This is purely a psychological pattern. So when price moves this, then it does this, and then it does that. Usually we see that kind of reaction. Okay, let me show you what I mean, and I will use my software that is called the pattern search software, PS software. Analyze large swings, nothing was detected. Analyze medium swings, nothing was detected. Analyze small swings, and we see a so-called bat pattern. So you see some numbers here. The 22.8. 22.8 is the size of your stop loss. Just measure that. 22.8. You see, and 22.8. 1-to-1 distance. I like to use that 1-to-1 distance, but you can use it a bit lower, a bit closer to that thing. Okay, as the overall trend is the downside, as we have that 26.18 setup on the higher time frame, and we have this bad pattern setup as well, we can see a movement to the downside that should not only be limited with this standard targets of the advanced pattern formation. We can shoot for some extended targets, at least to retest these lows. I like this level because it acted as support. Okay, let me go a bit to the history and find this level acting as a consolidation level as well. Okay, some minor resistance level, not very strong one, but some minor resistance level that acts as a magnet, and it can price may reach this level as well. So I would place my targets to hit this level, at least the secondary one, after I close on my first targets and break even the rest of my position. Okay, that's it about my trading analysis. We found support and resistance zones on daily. We identified the downtrend, predicted that broken resistance should turn into broken support should turn into resistance. So we decided that we can get involved either using a 26.18 strategy or using the bad pattern formation. And so the last thing that is left is only execute the trade. When price reaches to this green label of the price, my trade will be executed and I will be involved in this opportunity. Well, that's it. Thank you for watching this video. If you like that and found this video informative, please give me your thumbs up, subscribe to my next video in order not to miss my new editions. And if you want to learn something about the advanced pattern formation, just go to my website. It is called pssoftware.ru. PS means pattern search, software means software. pssoftware.ru, and you will appear at my website. So on the home page you have that psychological tips, because the psychology is the most important part of the trading. In the about me section you can find some information about me, who is that Alexander Nikitin, what is the history of the patents of the software he provides, and you can go to the Learn the Patents tab and find all the information about that advanced formations, all the ratios, how to trade them, how to identify them, where to place your stop, where to place your target, what is that X, A, B, C, and D points, what are those. And of course, if you are interested in my software, you can find out more about my software here as well. Well, that's it for today. Hope you like that. Until then, good luck, good trading. Hope to see you soon.